real estate is such a big piece of investment that anybody would make, and
Yep.
it probably makes up the majority of their wealth, I would say, as well.
Oh, yeah, no question about it. It's a huge part of the economy. It's hugely important. When people buy a house, they spend thousands and thousands of dollars on furniture, appliances, fixing it up because no matter what you buy, even if it's a move-in ready house, you're always doing things. Everybody wants something a little different. So people just tend to spend. And so the powers that be have a huge incentive to keep the housing market going because there are so many spillover effects into other parts of the economy. Look, I mean, we live, unfortunately, in a world where we have a centrally planned economy, as all of your listeners know. And the politicians, the corporatocracy, the elite class, they don't want an uprising, right? They want people to be somewhat content. And they also want to keep the customers coming to their businesses. So, in an economy where 72% of the American economy is basically consumer spending, right? And that's not true around the world, right? That's really high in America. And if that consumer spending stops, then hey, the Wall Street folks lose money, the big corporations lose money, the economy tanks, the GDP declines, the unemployment rate increases. It's just a spiral of death, and they don't want that.
Which hasn't stopped it from crashing in the past. Do you think that they need this now more than ever, or have they always needed it and they just can't control the crashes that happen in between?
Yeah, that's definitely a very good question there. They certainly can't control it completely. And last time, as we went into the Great Recession, we saw certain segments of the structure crumble, right? And really, it was first that the mortgage market was completely out of hand. Mark, there was literally nobody putting the brakes on the mortgage underwriting back in 2002 to 2006. And we all saw what happened. But what a lot of people don't really think about enough, I don't think, is that there were really two phases of that whole scenario. The first phase was the mortgage meltdown. And that was pretty easy to predict. I predicted it. I was doing lots of talks about it way back then, and lots of realtors would argue with me. But all you had to do back then is know that there were all these adjustable rate loans in the system, millions of them, and they were all underwritten at ridiculously easy underwriting criteria, and they had teaser rates for the first 3 to 5 years. And you just could tell when, probably everybody has seen at one time or another, maybe in their biology class back in school, but I'm not a biologist. Just have to throw that one in
You just
because
play
that's
one
a
on
cultural
TV.
meme.
Yeah.
Yeah. But, saw like a snake eat a mouse, right? Or something. I remember seeing that the first time as a kid. I was kind of shocked by it. But it's like this big bulge going through the snake. And so the same things with these adjustable rate mortgages, you knew when they were going to adjust. And they did, and people got payment shock. So that was way back then. This time, we don't have that. We have different issues this time around. And the economy is much more, I would say, controlled and regulated than it was back then. And I'm a big fan of not having it very regulated, but that's a whole rabbit hole we could go down.
Yeah.
No, not at all. Not in the mortgage world, at least. I mean, you could argue that auto loans or various other types of debt, student loans, they may have other types of issues. But what you just alluded to, Mark, was phase two of the problem. See, the simplistic mortgage meltdown, yeah, that was a problem. But what was really the bigger problem was what you just mentioned, the bundling of the loans, the acronyms that we all learned after that, CDOs, et cetera, where there were these sort of fake insurance products that all of the investment banks and the Wall Street tycoons were using. And really, it bankrupted the country of Iceland. I mean, it was so far reaching in its global impact. It was absolutely incredible what happened last time around.
Now, going back to the politicians, don't they want real estate to be higher? I can think of many reasons why that would be the case. So, for example, you made the point about GDP. So we have a debt to GDP, nationwide, that's dangerously high.
Yep.
It had gotten above 130%, which is like the point of no
Right.
return. It came back slowly, but to your point, if real estate were to crash, it would suck the money, the numbers out of the GDP, which would then really exaggerate that. Another reason why, to your point, I mean, people feel rich when they have that. That's good. But
The
even more
wealth
than that,
effect.
the
Yeah.
wealth effect, yeah. But then we also have all the collateral that's been pledged for these loans. So the whole system is
Yes.
based off of debt. And what happens is if asset prices start going down, then collateral starts not being good enough,
Right.
and then debts become called, and then it causes this
Yep.
liquidity crisis, which is a downward spiral. And then
Exactly.
finally, I don't have the exact numbers in front of me, but I've looked at the data that shows that the amount of revenue the government brings in from capital gains is making a huge chunk of their budget these days.
Yep.
And if asset prices stop going up, then capital gains stop coming in and a huge chunk of their revenue. So we just saw this week Biden talking about this new tax plan, and he thinks it can raise an extra $2.5 trillion in taxes by, I think, repealing some of these Trump tax cuts. And so they need that revenue. And if cap gains go down, then they lose a big chunk. So those are all good reasons. I mean, those the kind of the same you're looking at.
And there's definitely more than that. There are other taxes, not the least of which are the local taxes. So, all these municipalities that depend on property tax revenue, if values go down,
Mm,
that hurts them in a huge, huge way. And as you alluded to, it's a domino effect because the whole world economy, I mean, every economy, it's all the same game. It's all just one big giant bubble that has got to keep inflating because so many things depend on it. And it's hard to know in a world like this what anything is truly worth, right? Because we have all these, and when I say this, I don't mean it in a technical way to define the actual instrument, and the word is derivative. But there are so many things that aren't really derivatives per se, but they are still derivatives, right? Because
right.
everything's just attached to another thing. And so it's a very interconnected world.